Hello ladies and gentlemen, today we are going to be going through an amazing 5-minute fair value gap trading strategy. This strategy this time is different than the other times because it is showing you how we are following the trend. This is a trend following strategy. It is underestimated, it has been hidden from you, and it is about time that I bring it again back in the surface. So let's go ahead and begin with our video. And you know me guys, always when I begin, I am going ahead and I'm showing you an overview of what is going to follow. Well, look at all of those movements. This is the 5-minute time frame only. We are supposing, of course, that we are moving in an uptrend from what we are seeing right here. Every single example, I have 5 examples for you. Okay, we have 5 examples and everything is taking place on this image, this screenshot that you see right here. If you want to pause your video and try to identify what we're going to be showing, then be my guest. Otherwise, there's no problem at all because I'm going to be showing you the examples one by one. Let's see an overview of our examples first, and we just have 3 rules, nothing more than that. Rule number 1 says that we need to identify a break of structure. It is very simple. I will be going through every single one of those 5 examples because I want you all to be able to trade even if you cannot afford any of my exceptional services where I'm trading live every single day. I'm showing the trades live, the mistakes live, and everything that takes place in the life of a real trader. But if you cannot afford it, of course, I want you all to be able, even the beginners, to learn and be able to trade through those free videos. So, on example number 1, and all of the examples of course are over here, I will show you an overview in the end. What do we see? We see a break of structure. Why is this a break of structure right here? Because on example number 1, of course, because this high is higher than the high of the candlestick to its right and of the high of the candlestick to its left. Example number 2. I'm showing you those things because many of you cannot identify what a proper high is. You think that a high should be something like that. You need to see that. This is not true. Now, this is of course, I have cut the candlestick to its left, but this is also a high right here. Why? Because you will see later on that there is a candlestick to its left which is lower. The high of the candlestick to its left is lower, okay? And the high of the candlestick to its right is lower than this one. This makes it a valid high, so a valid break of structure. This is that a break of structure right here. Absolutely. Now, why am I choosing this point and not this point, even though this would qualify as well? Because I want to see the highest point of the structure being broken, okay? This high is higher than the high of the candlestick to its left and higher than the high of the candlestick to its right. So this is our valid high and we extend that to the right and we have the break of structure taking place exactly right here with this bullish candlestick. Example number 4, this one right here is a valid high. Again, it is higher than the high of the candlestick to its left, higher than the high of the candlestick to its right. And example number 5, very important as well, because until here you have seen that we have different colors of the candlesticks that the high is being created from, besides of example number 3, that we have 3 bullish candlesticks. A high can take the form of this one as well. You see, all bullish candlesticks, but this high again is higher than the high of the candlestick to the left and higher than the high of the candlestick to its right. So this is a valid high. This makes it a valid break of structure exactly right here. Now that we have cleared out those things, we can go ahead and proceed with rule number 2. And I will be taking all of the examples one by one. Okay, so now example 1 that we saw here, I'm going to be analyzing it. Rule number 2 says identify the most recent FVG. FVG stands for fair value gap. The most recent, guys, what does the most recent? It means the closest to price action. So if we are exactly right here, let's say, forget about the price action to the right, the most recent fair value gap is this fair value gap right here and not this one right here. I didn't say the lowest, I didn't say the one in a discount, I said the most recent, the closest to price action. So in this occasion, the one that is in a premium. Nasdaq, this strategy applies on Nasdaq. Okay, many times Nasdaq will just retrace here and continue if the trend is strong. It will not come back into a discount. This is what we want to benefit from with this strategy. If you are able to identify those conditions of the market that give you a clear trend, and you can milk the trend, not just take one trade per trend, okay, then you will be successful. You need to take all of those trades and more that you would be finding in this whole movement that we showed right here, okay? So the most recent FVG is this one. A fair value gap is a gap that is created between three candlesticks. This is one candlestick, this is number two, this is number three. The low of the third candlestick and the high of the first candlestick left this gap. This has not been filled. With those three candlesticks, we see a gap in candlestick number two. If this wick would have been here, there would be no gap. Okay. Example number two. What is my most recent fair value gap? This is the only fair value gap in this occasion. Here we have the break of structure. You see, I have identified the break of structure as well. And the most recent fair value gap is the only fair value gap in this occasion. This is why I decided to make many examples for you this time. And it is this fair value gap right here. It is created from the low of candlestick number 3 and the high of candlestick number 1, the gap that is left in candlestick number 2. Okay. This is our gap. We will talk about the entries and the targets. Do not worry, do not skip anything if you want to succeed. And if you want to succeed even further, you can go ahead and enroll in my spectacular signals or one-on-one or in my spectacular academy. And you can go ahead if you want to trade these fantastic strategies in a very professional prop firm. I am presenting you with Earn to Trade. Earn to Trade is a fantastic prop firm running a 60% off promotion. You pass your evaluation. You do not need to pay anything when you get transferred to the funded account. And guess what, guys? They also transfer you in a real account after all of those things. So let's assume that you're going ahead and trading the trader career path. You can choose, for example, the 50K account. You pass the evaluation. You get transferred to the live sim account right here. You can withdraw as little as $100. You pay the activation only if you get a withdrawal. The activation of $139 you pay only if you make a withdrawal, contrary to other prop firms where you need to pay for the activation in advance. If you get a withdrawal, when you get automatically transferred from the evaluation to the live sim account, then let's assume that you hit your target of $2,500 and you can withdraw the full amount, by the way. You just pay the activation fee from your withdrawal and then they transfer you, they scale you up and they transfer you to a higher account of $100,000. If you reach the max payout, then they transfer you to another account. You don't need to leave any buffers and then you get up to 400K. In live accounts. Those are live accounts, real accounts, guys. So this is a fantastic prop firm. Click on the link down in the description or in the comment section and also use code ChrisFX for your 60% discount where you pay only for your evaluation. You will just need to keep a 30% consistency rule, which is pretty simple. I will go ahead and make an extra video explaining all of those things. So combine my spectacular strategies with Earn to Trade if you want to become a successful and profitable trader, a professional trader, in other words. Click on the links down in the description. Example number 3, guys. We are over here. Look at that now. This is a peculiar example. Look here and here. You remember example number 3. This high that is higher than the high of the left, higher than the high to the right. It is the highest point within this consolidation over here. It gets broken, so the break of structure happens with this thing right here. I am showing you those examples again because example from example differs. It's not very clear every single time. Those still qualify. Candlestick number 1, candlestick number 2, and number 3, the low of 3 and the high of 1 leave this And this gap that they leave unfilled, let's say, on candlestick number 2, this is your fair value gap, your unfilled area of candlestick number 2 that has not been filled from the high of candlestick number 1 and the low of candlestick number 3. This gets tested, as you see right here. We will see it later on. Example number 4, I'm going through them one by one again. This right here was our break of structure, right here. And we have the gap that is left between those two candlesticks. I'm saying the most recent FVG, but in those occasions where we have, let's say, example number 1, we identified the one in the premium. Here we just have one fair value gap. In example number 2, only one fair value gap. In example number 3, only one fair value gap. In example number 4. And example number 5 is this one right here, where again we have the most recent fair value gap is only one fair value gap. It is the only one and the most recent at the very same time. But if there would be another gap up here, let's say, created over here, you would choose to trade from this one first. Okay? And the only one, actually, because you are following a strong trend. The premise of this strategy is that we are following a very strong trend. We don't believe that price is going to be retracing into a discount, and the discount would be in an uptrend. Let's say that price would come back over here as an example from this leg. So the same thing holds in a downtrend. We would go ahead, identify the most recent FVG to trade from, and we would not be expecting for price to retrace into a discount with this strategy. Okay, let's move on to rule number 3. There we go, rule number 3. Here I have all of the examples. I have spent the time, as I'm doing with my community. I'm 24/7 on the phone and on the screens, on the charts. I'm doing my testing. We have optimized the King strategy in the signal service to a 66% winning percentage with a 2-to-1 reward to risk, fully mechanical approach. At the New York Open, there is no chance that somebody can miss the signal or say that I traded it differently. The rules are so specific. We are not messing around as other traders are doing out there. We have mechanical rules, specific rules, and this is why I'm trading only this strategy with the signals. But if you want to learn more, of course, you have my other spectacular programs. Rule number 3, wait for price to react from the FVG. We will see what the reaction means. Everything takes place on the 5-minute. You do not scale down to a lower time frame. And then enter as seen below. The same 5 examples. We will start from example number 1 again. This was right here now our break of structure, if you recall. From example number 1, we have this fair value gap and this fair value gap. We are identifying the most recent fair value gap, the one that is in a premium. From this movement, it is in a premium. This down here would be in a discount as an example. Okay, we are identifying the most recent one. A candlestick comes back and gives some form of reaction, and because we are not magicians and we don't know if price is going to continue lower, here we would have entered instantly at the low of this candlestick. The first reaction candlestick is the one that we are using. We are entering right here. We are targeting a fixed 3-to-1 reward to risk, but where does the stop loss go? Does it go all the way down? No, major mistake. We are following the extremely strong trend, and we are speculating that price will not retrace into a discount in this occasion. So, the stop loss goes below the most recent FVG candlestick. What does this mean? From the 3 candlesticks that created the most recent FVG, and this is the FVG, the stop loss goes below candlestick number 2. This is what it means. So this candlestick that has the FVG, let's say, on it, number 2, below the low of this candlestick is the stop loss. And this would have been a win. Let's see example number 2 out of the 5 examples. The break of structure, if you recall, happened here because this high is higher than the high to the left and higher than the high of the candlestick to the right. We have an FVG. It is the most recent, but it is also the only one, so you can say the only FVG in this occasion. Price retraces and leaves this pin bar. The entry on the 5-minute time frame, guys, everything on the 5-minute time frame, you do not need to change to another time frame. The entry goes exactly right here. The stop loss goes below candlestick number 2. So the one that has the FVG, let's say, on it. Okay, below this one. So the stop loss should have been a little bit over here, or you can place it a little bit below. And the target of 3 to 1 is hit again. It is hit a little bit later on. Now, on these strategies, when you're trading these strategies, you need to build on your position. So you see the one example is following the other one. So sometimes here you will see example number 3. You need to be in 2 trades at the very same time, or 3 trades even at the very same time. Okay, so you need to speculate with these strategies. Everything is speculation anyways. In trading, generally speaking, that if this is a strong trend, I want to milk it. So if I am a trend following trader, I want to milk the whole trend. And this is what we are doing with this one. You will need to be in multiple positions at the very same time until you hit all of your targets. You just need to regulate your risk always, guys, okay? I'm not a financial advisor. This is absolutely up to you. Rule number three, I'm saying, excuse me, example number 3. It follows example number 2, you see. So we would be in this trade right here. At the very same time, example number 3 comes here. Here, look now. Over here, exactly. There is an FVG after the break of structure. We are entering after the reaction from the FVG. The reaction candlestick is huge in this occasion, but we have to enter here with the stop loss below the candlestick. I am placing it a little bit below, as you see as well. We are targeting a 3 to 1 reward to risk, and this is a win. And now you will say, Chris, how is it possible you are manipulating data? So I'm not trusting you. You are showing us only the wins. Are you sure, guys? Example number 4, loss. Following the previous example exactly, I am taking you to this example right here now. So those trades are all running, which is a loss. I'm not skipping any example. Break of structure is happening right here. Okay, FVG right here, the only FVG. Of course, if we would be having 2 FVGs, I would be using the most recent to price action, the one in the premium, because I suspect a strong trend. I expect a strong trend. Here is the first reaction candlestick. It is this candlestick right here. Stop loss below the low of the candlestick which created the FVG, of candlestick number 2, okay, of the 3 that created the FVG. Let's say it like that, 1, 2, 3. So below the low of candlestick number 2 out of the 3 which were responsible for the creation of the FVG. Price comes back a second time, throws us out, and then it goes, guys. Throws us out and then it goes. Which happens a lot if you are a serious and realistic trader. You will see that happening sometimes. It is very annoying, but it happens, guys, okay? Example number 5. Here we go. This peculiar, let's say, situation. So again, guys, do not expect to see something like that to say that we broke a high, something like that. This is a high. If you don't identify that and you wait only for major moves like that to say that we broke a high, you are done. Forget about it. You follow the strong trend and you have to watch the details here, the small breaks of structures, even if they are tiny, right here, let's say. Okay, this is one of those examples on the 5-minute time frame. This is a valid high. We have the break of structure here. 1, 2, 3 candlesticks created the FVG, the most recent and the only one FVG, again in this occasion. We extend that to the right. The first reaction candlestick happens with this. The first reaction happens with this candlestick right here. Okay, so we enter exactly at the close of this candlestick. And here we are placing the stop loss below candlestick number 2 out of the 3 that created the FVG. We are targeting a 3 to 1 reward to risk, and this is a win. This is an overall picture of the 5 trades that we just showed, guys. Here you will tell me, Chris, there was another FVG right here. Yes, but price never retraced into it. This is the only reason why we didn't show it. So if you were to milk this whole trend, you would have started over here. You would believe in yourself. And in your risk management, you would be going for a 3-to-1 non-stop and you wouldn't say, let me close it earlier. Because this trade, before this one finished, this one would be activated already. This one now finished, you would be tempted to close this one as well. Okay, over here as an example. But no, you are saying I'm adding more and I'm milking the trend. And so it happened, even here you would see that this trade would be activated and lost, this fourth one, and price would also reject and come back, and this would be in a drawdown, plus this one wouldn't have finished yet. So you would have gone this one, and then this would be in a slight profit until here, 1.5 to 1, and this would be in a drawdown, and this would have been lost already. Okay, so you would be very tempted to close everything and say that I won a 3-to-1 now. But look what you would have lost, guys. 11 units you would have lost. 3-to-1, 3-to-1, 3-to-1 loss, and another 3-to-1. 3 times 4, 12 minus 1. We have 11 units of whatever you are risking, according to your liking. So now, like this video, subscribe to my YouTube channel. I'm spending a lot of time to create those videos for you. To those of you who cannot afford any of my exceptional extra services, I have the utmost respect for your support and for you watching my videos, and this is a give and take relationship between us. Okay, so I'm showing you those very well made PowerPoint presentations because, guys, you deserve to learn. Now, subscribe to the YouTube channel, as I said, leave me a like, share it with every single person that you might know and not know. Go ahead and spam people on the streets and say, Chris FX's video, go ahead and watch it right now. Actually, do not do that, that would be silly. But if you want to do it, go ahead and do it. This is the end. Again, if you can afford it, join the spectacular services, become funded and get consistent withdrawals like the other students of mine. I am having all of the recordings in my Telegram group. I'm not deleting a single recording, and you will see that we are hitting the percentages that I told you. You will go through the lives and you will see real trades that I'm taking every single day. Okay, I'm not deleting a single live. Links are in the description and in the comment section, also for the prop firms and especially for Earn to Trade, which is a very, very professional prop firm. They are running the 60%. You do not pay for the activation of the funded account, and they transfer you also in a live account. And every time you withdraw all of your money, you don't need to leave a buffer. Not only you withdraw your money, they transfer you in a higher real account. Check them out. Take advantage of the 60% off promotion by clicking on the link down in the description and using code ChrisFX. Okay, and be a happy person. Take your time. This is gonna do it for today, traders. And thank you all for watching. Until next time.